What's going on, world? Thank you for watching and listening to another episode of Insightful Principles. I just wanted to check in with you all quickly and give you a heads up of what to expect today, June 15th, 2022. We actually have the Fed meeting of this year happening today. It's going to be at 2 o'clock p.m. Eastern Standard Time. And there's a lot of questions right now. When we think about inflation data coming out at 8.6%, seeing record increasing prices across food, energy, and housing, as well as the producer price index came out yesterday and also showed that wholesale prices are up 10.8%. And like I mentioned before on this channel, the CPI and the PPI can really be used together to really understand how prices are changing in the economy. And whenever you are seeing record increases with the producer price index, that is going to give you the same correlation with the consumer price index, because if we're paying more for goods and items, whether that's at the grocery store or at the gas pump, the supply, the production of those same goods and services have to go up in price as well to be able to keep up with the demand. So there's many questions around, what will Jerome Powell do? Is he going to take corrective action today and actually come out and say that he is going to increase interest rates by 75 basis points? I definitely think the Fed has lost a lot of credibility, because even if you look more into mid 2021, when inflation really started to go higher, a lot of people were saying that it's transitory. We heard Powell saying that all the time. Well, it doesn't look very transitory right now. It looks like that it's here to stay, and that this is a more prevalent issue that they have to tackle. Now, another thing to also keep in mind is that there were many firms already that have came out this week and have said that they are expecting that the Fed is going to come out with a 75 basis point rate hike. And some of those companies were JP Morgan, Goldman Sachs, Barclays, just to name a few. And just to put into context exactly when I say 75 basis points, essentially what that means is that let's say, for instance, you have a variable debt that changes and fluctuates over time. When there are interest rate hikes, your variable debt is going to be affected the most. For fixed debt, you don't have to worry about that, because if you've locked in an interest rate of whatever you have, whether that's credit card or even auto loan or mortgage debt, that rate's going to stay the same. But when you have variable debt, this is showing that the interest rate hikes is going to increase it even higher. When this happens, when we have rate hikes, debt just becomes more expensive within our economy, and it just makes it a lot harder for some people to be able to obtain debt, because it may be higher interest rate. So if you have debt that's like charging you a 6% interest and it is a variable debt, then that means that with the interest rate hike, if they do raise it to 0.75 basis points, it will be 6.75%. So that's just to put into context exactly how that affects us, that have any variable debt. Now, one other thing to keep in mind is the federal funds rate. This can be tremendously impacted when the Federal Reserve increases interest rates. And think of the federal funds rate as the rate of interest that banks charge each other for lending their reserves or their cash. This rate will impact the economy, because you also have what's called a prime rate. And this is the rate where this is the interest that banks will charge their clients for loans. So whether that's mortgage, like I mentioned, auto loan or credit card debt, these things are going to be a lot higher as they continue to increase interest rate hikes throughout the year. Now, the target for the federal funds rate right now is 0.75 to 1%, but the Fed is planning to increase their rate hike, so that target is going to go up. So that may impact you as a consumer if you are looking to buy a home, if you're looking to be able to take out a loan at a bank for auto loan, whatever the case may be. But in my opinion, I think what has to happen today is that the Fed has to be aggressive. They have to come out and they have to say that this is our main priority right now of getting inflation down and we're going to do everything we can, and we're going to increase rates. I think they're going to come out and say 75 basis points. I'm making a prediction here. I'll definitely check in with you all to see what happens, but I definitely think that they will come out a little bit more aggressive because they don't have any choice. And this is one of their main mandates right now, along with being able to reduce their balance sheet. So I definitely think these next two Fed meetings are going to be critical. The one that we have today for June 15th, and then also the next one is coming on July 28th. I think that these next meetings we will get that 75 basis point rate hike. Now, what does this mean for you as an investor? One thing I would say is that we may potentially see more pain within the stock market because, and across all asset markets, whether it's crypto, commodities, because when rate hikes do increase, we're more in a more tightening environment. So that is going to have a direct impact on some more bearish days when we think about the market. But I definitely think that there's not going to be a soft landing here. You know, it's likely that these rate hikes are going to continue until inflation has peaked. But I don't see inflation going down anytime soon. So I do think, you know, through the course of this year, we are going to see some volatile days. As far as when the Fed is going to pivot with lowering interest rates and just stopping completely, I still think that we may go in a recession because we still have many supply chain constraints across the world. One thing I read this morning is there's a lot of food plants in various different parts of the world that are just burning up accidentally. Plants are just going on fire, which is a lot of our supply chain where we have different poultry or meats or grains facilities that actually send these goods to grocery stores across the world. So that's a big issue right now. We still have the Russia-Ukraine situation still going on that has been causing gas prices to skyrocket. And then, like I mentioned, the Fed balance sheet is another issue that they have to work on because during March of 2020, their balance sheet was only at $3.9 trillion. And now in May of 2022, it's at $8.5 trillion. So it's nearly doubled in the course of 2 years. So I think all of these elements together can still lead us into an economic downturn where we have some contraction within our economy. But definitely stay tuned for the Fed meeting. Definitely want to check in with you all and let you know what to expect for today. And as always, if you can continue to like, subscribe, and share this video. And don't forget to hit that notification bell so you can be notified every week when I drop content. And thank you for watching and listening, and take care.